Today at today's workshop, we're gonna be here talking about building and understanding credit. I'm a peer financial coach at the Financial Wellness Center, and I'm a business major.
And I am Dr. Gilbert Rogers, and I am the Assistant Director of Financial Wellness. We hope that you gain something that you can use and apply to your situation, and something that will help you to kind of position yourself for future financial success, especially when it comes to credit. This workshop and applying what we give today will allow you to kind of get a head start of what managing money will look like.
Our mission here at the Financial Wellness Center is to empower students across campus with the knowledge to make financial decisions during college and after college.
All right, and as a part of the Financial Wellness Center, we're just providing you just a little bit about our program before we take that deep dive into credit. We specialize in the critical 5 areas of holistic financial wellness. They are earning, spending, borrowing, protecting, and saving and investing. And within these areas, what we really highlight are areas that impact college students, specifically budgeting, managing the inflow and outflow of money, student loans, understanding credit or credit cards, identity theft and fraud, and also saving strategies and learning about investing. So these are all areas that the Financial Wellness Center is more than happy to work with students on, and we will provide, as Jason will talk about, individual coaching on any of these areas.
We look to reach students in several ways through demand like financial workshops like we're in right now, peer one-on-one financial coaching virtually for the moment, and building relationships across campus through partnerships and different events.
And our learning outcomes for today. So for you all who came out, thank you for attending. But these are the areas that we would really love to focus on. We want you to leave with an understanding of, 1, what credit is and how it impacts your life. 2, how to check your credit report and better understand your score. And then 3, we want you to leave with tips on how to build your credit while you are in college and sort of get that head start on your personal financial journey while you're in school. And we don't want you to look back after you graduate and say, man, I could have done that while I was in college. We want you to understand how to build that credit score and get it as high as possible while you're still in school.
In today's agenda, we'll be covering what is credit, what does it mean, why is it important, and what can you be doing now while you're in college. And we'll finish up with an open discussion.
There we go. Grace, the first thing that comes to mind is credit cards. And yes, that is a huge part of credit and what we need to have an understanding of. Credit impacts things like housing. Thanks, Oscar, of course. Buying on borrowed money. That is so true. It's trying to buy something with money that's not necessarily yours. Oh, that was Mila, sorry. And then Gabby, credit allows you to make big purchases. That is so true. It does. And as you make those big purchases, there's something called risk that's involved. Loans for big purchases, for houses or school, yes. Mortgage, student loans, all of those involve credit. So thank you all for participating and sharing what credit means to you.
Credit is the measure of trust of one party has another party. For example, you build relationship with someone of a trust, and the biggest pay in the future to pay.
Oh yeah, right on. And this definition came from Bankrate, Bankrate that we have on the slide there. It's just as Jason said, it's that measure of trust between one party and another party, and you may hear street credibility or credit just in general. It's all about trust is what it is. How much can you be trusted? And usually with credit, it's involving money. Now, why is it important? And as you all mentioned, why credit is important, you all answered that earlier. When you think about credit, what comes to mind? These are the exact reasons. So when you think about financial product, some sort of loan or a credit card, credit comes into play. They're going to rate you based on your credit. When it comes to housing, rental, even when you get a rental, when you rent an apartment, they're going to assess your credit. Utilities, when you go and you start a utilities account, They're going to view your credit history to determine what sort of deposit you will have to put down, or if even one is needed. Also, with insurance products, credit is evaluated. Does anyone know why they look at your credit when they're evaluating insurance, either on a home or a car? All right, so if not, you're going to learn something today. So I'll hold off on that one. All right, asset building. If you're doing any sort of purchasing real estate or something like that, they're going to review your credit. And then last but not least, employment. So you're at school, you're attending the university to obtain a degree that will hopefully allow you to get that job or get that or jumpstart that career. Well, with a lot of employers, they take a look at your background and they take a look at your credit. Again, they're assessing your past relationships and what agreements you have made in the past, and they're assessing whether or not you stuck to those agreements, which is basically what credit is. It's that relationship between two individuals, and they evaluate you on your past history. All right, so how is credit evaluated? So we talked about what it is, where it impacts you. Now let's talk about what exactly are they looking at to make that assessment, to say Jason's credit worthiness is extremely high, so I'm going to form this relationship and agree to XYZ terms. So what exactly are they looking at to make that determination? And let's talk about that. The thing that they look at is called the credit report. So I'm sure many of you all have heard of a credit report before, but maybe not referred to as your resume, maybe not referred to in those terms. But your credit report is basically your resume in the world of finance. So think about your resume when you're applying for a job and you're looking for employment. They're looking at your past history and they're doing some sort of assessment of your experiences and all these other factors that are kind of assessed. But when it comes to your credit, they're assessing your credit report, which is basically a compilation of your history involving finance. So what agreements have you had in the past with lenders, and how have you honored those agreements? Have you paid the bills on time? Have you overextended or overexhausted your credit that was given? For example, if you had a credit card, did you max that credit card out? So these are the things they're looking at. And also in your resume in the world of finance, which is your credit report, they also look at your employment history. So employment history and consistency, that it doesn't directly impact your credit score, so to speak. But when you're applying for a loan, they want to know whether or not you've had consistent employment and you've held a job for a while. So those are the things they will really look at. Previous addresses, that will show up on your credit report, just to verify that you've been where you may say you are when you're submitting some sort of application, and then other information that is specific to you. So any public information as far as liens or judgments against you would also show up on a credit report. And Jason's going to tell us about the big three.
The big three agencies are Equifax, Experian, and TransUnion. The credit reports are reported by these three companies, and they're calculated. We can pull one up here at the annualcreditreport.com, and you guys can try to pull this up.
Yeah. So, and to piggyback off of what Jason just said, Annual Credit Report is a place where you can go and access a free copy of your credit report. And that free copy of your credit report, you're usually allowed 3 free ones per year. But due to COVID, they have increased that. I'm not sure what the limit is or if there is even a limit. But if you all want to take a minute or two, we will pause the workshop for a second, give you all time to access your free copy of your credit report, which is going to list that finance history of yours, any trade lines, any agreements that you've had in the past. And for some of you all, you may not be able to see much info because you may not have much in your credit history. But if you have student loans or something like that, that should show up on your credit report. And if you all have any questions as you pull it up, we are here to ask, we are here to answer those questions and provide any additional info if you want to ask those questions, or you can wait until after the presentation or direct message me, myself, or Jason, and we would be happy to explain something that that you may not understand on your report. All right, so as you all do that, this is what you may see, something along the lines of what you see on the slides there. They're going to ask you questions to fill in info and to give you a little more info about this webpage. It was actually set up by the federal government back in the last stock market crash in 2008, 2007-ish, back when the housing market crashed. It was set up because you had a lot of consumers wanting to have access to information because they didn't understand how creditors were evaluating their credit histories. And also fraud and identity theft started to increase. So the federal government allowed this web page to be opened up. And once it was opened up, they said, hey, you can go here, you can access free copies of your credit report, and you do not have to worry about any negative hits to your credit. So you will not take any hit to your credit by accessing your credit report from this page, from that annualcreditreport.com webpage. Now, for those who, oh, darn, don't have all my info. Oh, and Oscar, if they don't have your info, they likely provided a phone number where you can reach out and call, or an address for you to mail info. But you can always call and speak with someone and kind of gauge info. So did anyone notice anything strange on their credit report? I mean, not too much info, but anything that stood out that you're like, wait a second, what is this? And one other thing I'll mention is you have those big three bureaus that Jason mentioned, Experian, TransUnion, and Equifax. When considering those big three as far as the bureaus, you want to at least, if it's your first time pulling your credit, you want to access a copy of your credit report from all three. And the reason is when you go to a financial institution or a bank, or if you apply for a credit card, you don't know which one of those three bureaus they are actually going to pull and do an assessment of your credit history on. So you want to know what's showing up on each of those credit reports with each of those bureaus. And what that will do is allow you to see if there's something that's missing that could potentially help your score. So if I've had a credit card that I've never been late on any payments on, I want to make sure that info is showing up. And if it's not showing up on one of the reports, you can get that info added by contacting the bureau. So it's a little tidbit, a lot of info, but definitely something you can do, and it can be helpful. So hopefully, if you all have any questions about that, you can reach out to myself or Jason, as I said, during the presentation afterwards, and we'd be happy to provide more info. But for the sake of time, I promise you all, we'll get you all in and out with some good info. We will keep this thing moving along. So we talked about what credit is. We talked about the credit report, which is where they do the evaluation. Now let's talk about credit scores. So one of the questions was during the Kahoot game was, what is a credit score? It's basically that credit report. They take all the info in your credit report, all the trade lines, all the payment history. They use some magical algorithm, which I can't tell you how it works. I won't lie to you. And then they come up with a number, and that number is your credit score. And another one of the questions on there was, how many do you only have? Something along the lines of, do you only have one credit score? The answer is you actually have a whole bunch of credit scores. There are countless credit scoring agencies out there. However, you have two main ones. And of the two, the FICO is the most commonly used credit scoring model. So 9 times out of 10, when you go and pull a copy of your credit report, well, when a financial institution pulls a copy of your credit report and they evaluate your score, they are going to assess you based upon your FICO score. 9 times out of 10, I'm going and a financial institution is using my FICO score. That is probably the score that you would want to know. And that score is usually different, quite a bit different than the Vantage score. Now, the Vantage scoring model, I actually think it's a better scoring model, but it's not used as often. And if you have Credit Karma or something like that, they use the Vantage score. They say, hey, we have a free copy of your credit score that we'll give you. They're giving you the Vantage score, which isn't bad. It just doesn't, it's not a one-for-one match with the FICO score, if that makes sense. So just be mindful of that. When someone offers you a free copy of your credit score, they may be issuing the Vantage score, which is, it's a good score to know, but it doesn't tell the full story of your credit history if a bank is assessing you based on your FICO score. So hopefully that makes sense. If you need more clarification, just let us know. All right, I'm gonna pass this one off to Jason. He's gonna tell us about what exactly affects your credit score.
There are many things that could affect your credit score, like your length of credit history. to new credit. As you see by the percentages amount, 30% is the amount owed can affect your credit. So if you max out your credit card, that could be a problem in your score. And the credit scores range from 580 to 799 here. So 789 is exceptional, really good. The good is 650 to 739, and there are many things that could affect your score. Like I said, payment history is very important as well. So it's important to be consistent on your payments.
Yeah, Jason, and that was one of the questions on our Kahoot quiz. Which area impacts your credit score the most? And as Jason said, payment history is the area that really has the largest impact. So credit mix comes into the equation, length of credit history. If you have a new credit account, look at that. Amounts owed, how much money do you owe? But payment history is the biggest part. Now, if you make one major change in another area, it can drop your score drastically. But the algorithm that I talked about, that's mysterious that they use, it's supposed to factor in the weights proportionately to these areas. But yeah, that's what they do. That's what they tell us. All right, so now we talk about the credit report, the credit score, how it's evaluated. Now we want to talk about what the result of that evaluation is. So once they take a look at your credit report, they come out with the score. What do they ultimately use that information to do? And this is where the interest comes into play. So they decide, if it's a financial institution, they will decide how much to charge you for borrowing money. And I think it was, I know Jordy mentioned that, Mila mentioned it, buying on borrowed money. When you do that, when you borrow money, or if you get a credit card, or if you're financing something, they will charge you what is called interest, which is basically their fee for saying, hey, I'm going to give you this money temporarily. And you see, as the definition states, it's the amount charged by the lender to a borrower for the use of its money. And that can be in the form of a fixed rate or variable rate, delve too much into. But a lot of times with loans, you have origination fees, and you can potentially even have a prepayment fee, but it really just depends on the financial institution and the types of fees they charge. So just be mindful of that. Your credit is important because they determine how much to charge you for borrowing money. Well, why you think college or while you're in college is a good time to grasp credit and get a good understanding? Shortly after college, you have to probably invest in some things. That is so true. Timma, hopefully I got your name right. If not, welcome to unmute and correct me. But shortly after college, you probably want to invest in something. You probably want to buy or finance something. And your credit, it's important. And as I mentioned earlier, you can do this while you're in college. There are a few key things that Jason and I will share shortly that are easy and simple that you can do while you're in college, and it can increase your credit score by 1 to 200 points. And instead of paying significantly more for whatever you finance after college, you'll save that money. And if you're paying off student loan debt, guess what? You have more money to apply toward that. Thank you for that. All right, so let's see. Oh man, first few answers here. Shortly after college, we're basically all coming out of college with a bunch of debt, and it's important to know how to keep our credit up so we can rent an apartment, get a car, or something. Exactly. Thank you, Rose. Many people will have to begin paying back their loans. Yes. So you can be prepared for life after college when you have to be independent, no more dependent on your parents. Taylor, nail on the head there. Hit the, head of the nail. Yeah, y'all know what I mean. All right, Oscar, coming out with a good credit score would help you out significantly with navigating the future. So true. So you all, I don't even think y'all need this presentation, this workshop, but I'm glad you came. But you all are exactly right. You're preparing for what's next, and this is what credit, just getting a jump start. And there's research out there that basically says that by taking a few steps early while in college, before you graduate, you can actually position yourself 5 to 7 years ahead, if that makes sense. So instead of you graduating and learning about credit, learning about investing, learning about budgeting and all these other things, after you graduate, and then it taking 5 to 7 years. Once you graduate, if you already have these skills down, you are 5 to 7 years ahead. So think about that head start, the head start on finances and life. And when we talk about compound interest and other things, it can really be huge. All right. So after you graduate, what's next? So employment, buying a car, buying a house or condo, insurance, insuring your car or home, anything you finance, whether it's furniture, appliances, etc. They will look at your credit. And this is why it's important, as many of the things that you all mentioned. Now, let me tell you something I was going to tell you all earlier. So when it comes to insurance, now we may not think about this, but when you go and you apply for, you apply to get insurance on your car, on your vehicle, and right now you may have a shared plan with a parent, a guardian, or someone else where you're on their insurance plan, or you may have insurance in your name. But basically, they look at whoever's applying for insurance and they decide how much to charge you for monthly premium, whether you pay that or by yearly or annually or however you pay your premium. They decide how much to charge you based on your insurance. Based on your credit report. They decide how much to charge you for premiums for insurance based upon your credit report. So again, credit impacts your life in so many different ways that you may not think about. But if your credit score is lower, they're going to charge you more money because they're going to say, hey, you show that you're a little more risky in the past with your other agreements and contracts that you've had. So we're going to charge you more money to supposedly offset the risk. Same thing applies for a home. They will charge you if you buy your first home and you get insurance. They're going to look at your credit and it factors into how much they will charge. For a car, if you're financing a car, of course, they're going to look at your credit. Now, I sound like I'm repeating myself a lot in these areas, but each of these areas are important. One thing that I encourage you all to do once you graduate is think about, buying a home or buying a condo. Start building equity in something, and then you start to build your future even faster once you start doing that. Because if you're going to pay rent anyway, why not pay for something that you'll own? And there are many programs out there that will take care of the down payment for you and all these other things that you may look at and say, wow, I didn't think I could do it. I highly encourage you all to just think about that once you graduate. All right. One other thing for college students real quick, before I pass it back off to Jason, is identity theft is the fastest growing crime in America, and it's affecting 500,000 new victims each year. And keeping that in mind and taking it into consideration, another reason college students should be mindful of credit and check your credit scores, check your report to see what's showing up. Because if something is inaccurate, you don't want to wait until you apply for a mortgage or a car or even a credit card to realize it. You realize it by checking your credit report. So be sure to check that. All right, and Jason's going to lead us into telling you exactly what to start doing now as a college student.
I believe to start doing now while you're in college, it's important to know how many credit cards you have through your, to keep it under a normal amount that you could use. A secured card is a way for you to practice a good a healthy financial literacy.
Yeah,
a credit card. Yeah.
Now I was going to piggyback off that real quick, Jason. So with monitoring your credit report, as Jason said, how many credit cards, how many credit accounts do you have? And also making sure that there's nothing strange showing up on that report. So that's the first step in establishing or building credit, is one, knowing what is showing up on your report if they generate a report for you. And then the second one, as Jason was getting into, is getting a secured card. I hear a few, oh, is that one through the bank? Yes, Rose, it is. It is through the bank. So let me explain how this works, and I'll pass it back to Jason. But a secured card, usually for a small amount. There you go. It usually is. So what happens is, say Gilbert, me, 10 years ago or however long ago, I go to the bank and I haven't established any sort of credit, but I tell them I would like to get a credit card. And they say, oh, okay, well, we want to review your credit history to see whether what you qualify for. They run my credit. For some reason, I'm not approved for a credit card. And what they offer then is they say, well, since you don't have a credit history, and we do our evaluation based upon what's been done in the past, we want to help you build credit. So what we will offer you is what is called a secured card, which means we will help you build up credit history because we will issue you a card which you will use, and we will report that information to those credit bureaus that Jason and I mentioned earlier. And as you use that card, you start to build up credit. But here's the catch. They require that you put whatever the maximum on that card is going to be, whether it's $300, $400, they require you to put that amount into a savings account and allow that amount to stay there. And then your credit balance or your available credit on that card will be the amount you have on that card. And as you use it, that available credit goes down. And what this does is it allows the bank to eliminate the risk of someone coming in, getting a card, swiping it, using it, and then going off and never paying the bank back for the amount that they financed on the card or the amount that they've used on that credit card. So it allows the bank to eliminate the risk, but it also allows the individual or the consumer to build up credit. So you would get the card, they issue you a card, you use it just like a credit card, but there's an amount of money sitting in a savings account at that financial institution that protects the bank from any risk of a consumer just going haywire with the card. So does that make sense? Hopefully, yes, no. And one other thing I'll add is not all banks offer a secured card. Some may offer what is called like a student card, which may not require that amount or that deposit into an account, but it is a way for college students to build up credit. So you just have to have that conversation with whatever financial institution you have or use, and ask if they have that secured card option available. Secured card is also used for individuals to build or to improve credit. So maybe they had a few credit issues in the past, but they want to right the wrongs and get back on track. They use a secured card. Now, the key with using a credit card is on that next number 3 there is that you must use it in a revolving fashion, which means month after month after month after month. And that is what pushes up your credit score. So you can't just get a credit card. And as I mentioned, as one of the questions was, and just get a credit card and expect your credit score to go up. You have to use it. And what I recommend and what I've told Jason and the rest of the peer financial coaches is buy a Sprite, buy a Gatorade, buy a pack of gum, buy gasoline or something once a month on a credit card, pay it off where you avoid interest, and then do that once a month, month after month after month. And I promise you, your credit score will go up because you're building a revolving history, and there's activity on the card, which shows that it's used. And then you also show that you can pay your bill on time, and then your credit score goes up. So it's like it's not a credit hack. It's just a smart way to use a credit card, avoid interest, and you may even get rewards. But I'm going to pass it back off to Jason to wrap up on this slide here.
Yes, like Dr. Rogers mentioned, a credit card could be very useful if you use it right. Another way to build credit is if you're authorized user of your parents, could be your parents or someone you know, and you could tag on to their credit history. So for example, if you were to use your be authorized user on your parents' credit card account, you would grow your credit through time. And it's important to pay your bills on time because like I mentioned before, it shows the agencies that you're consistent and responsible. Takeaways: it's important to protect your identity. Like Dr. Rogers said earlier, identity theft is one of the biggest crimes that happens throughout the year. It's important to check your credit report through the annual credit report.com. It's very useful, and it's important to know that you must start working on your credit score, and you could do it while you're a student.
All right, so here are a few resources and links as far as what we've covered today. Probably a lot of info, but again, you have us here as peer financial coaches here to help out. You can also visit any of these web pages to learn more about credit cards. That is something we'll possibly do in the future, is a credit cards workshop